Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. The Australian dollar has succumbed to further bearishness and now posts a 4-month low of 68.85 overnight after yesterday's release of the Australian April jobs report coming with a bit of a surprise. The Australian Bureau of Statistics' latest release revealed a total of 28,400 jobs was created over the month of April, higher than the 15,000 economists had been expecting. However, the unemployment rate rose from 5% to 5.2%. The mixed bag of results is unlikely to impact the chances of a potential rate cut next month for the RBA. So, although the papers are harping on this, I believe it's unlikely to see any rate move. From a technical picture though, from the break of 69.40 is now given a next target of 68 cents and reassessed from there. It is viewed though that from 68 figure 40 we could see a rebound from that level and therefore could see a rise back towards the top side of the range, which is seen roughly around 69.40 to 69.75. Nevertheless, from a technical point though, the market is still quite bearish as the ADX is trending. The MACD is still pressuring the bearishness to continue, but the RSI is a little bit oversold. Looking at the euro, the market has slipped lower overnight, and as you can see from a technical point, it is now focusing very much towards the immediate support of 111.65. It is assessed from there that the market should progress slower and keep to its objective that I'm still calling at this stage at 110.70.85. Since there's two rejections from 112.55.65, any recovery above the level of 112 towards that level should find supply increasing, especially to the fact that the technical implications are breaking down. And the dollar index also posted a fresh high of 97.68 and is only a stone throw away now from its objective of 98.10. My concerns to the dollar yen was slightly correct to the fact is it's bottomed out and yen weakness is continuing after the market is now risk off as the tensions between China and US trade wars have simmered somewhat. It is assessed now the market will look probably towards a resistance of 110.55.65 as yen slowly starts to buckle. Nevertheless, the strength of the US dollar may encourage the bulls to take the lead, and also the fact is we are not trending now to a bear case, but the RSI has broken over the midway point and the MACD is also leading for a further advance. The pound has slipped lower and now closer to its objective, which I'm calling at 126.70.85. Overnight, the British Prime Minister Theresa May agrees to set a departure date after the Brexit bill vote as Boris Johnson announces a leadership bid, as pressure has increased on Theresa May to step down as Prime Minister. So let's see how that all ventures out. But from a technical point, it's trending. We are breaking further towards the downside after taking out 128.10. Now I'm looking at, as I say, immediate target 127.45. And then I do expect to see coverage towards that level of 126.70.85 as profit taking may emerge. If you're trading, still keep your stop losses according to your risk management and lower every day we make a new low. The gold slipped away from 1,300 overnight and crushes the support of 1,288, but has paused. As long as we maintain above 1,280.82, then the bullish outlook is still there, and I still expect to see a recovery back towards this top side of the range. Sub 80 will leave me neutral. And wrapping up with oil, the market's rallied even further to its objective, which is getting closer now at 64.65.85 a barrel. It is assessed that demand may increase after further tension overseas with the Middle East has flared up after the Saudi pipeline was attacked. This, in terms, could see further risk and a rally to its target, with any pullback still see support from $61.5 to $60 a barrel. Well, that wraps up for today. Thank you very much for joining me, and as always, look out for the intraday report. And I hope you enjoyed the new day that's about to commence and a great start to the new weekend.